Were you fascinated by the idea of calling tops and bottoms when you first started trading? I was very fascinated by that. And first I thought that it was very far-fetched and elusive for a long time. Not till I learned about the Elliott principle, I started to see that there's a way for us traders to be able to identify tops and bottoms. While I practically use the tools and techniques that we are going to discuss on a daily basis, analyzing the intraday commodities markets here at Elliott International, trading wise, I'm more of a conservative trader. Being a conservative trader means that I'm always on the lookout for evidence and clues to support the analysis and justify a given position. My name is Nandi Laimoud. I'm the intraday commodities analyst here at Elliott International, and this is the introductory video of a 5-part video mini-series about identifying tops and bottoms. From now on, we'll be talking about locating tops, and keep in mind that the same can be applied to bottoms. In order to identify a top, we have to know first what constitutes a top. A major top always ends in either an impulse or an ending diagonal, and both patterns always subdivide into 5 waves. So we decided to break this mini-series into 5 parts. The first part, we will be talking about impulse waves and how to identify a top by looking into their substructure. The second video will be focusing on ending diagonals and their substructure. The final 3 videos will focus on supporting or aiding tools that would provide clues to help us identify a top, and the first of these tools is lagging indicators. The fourth part would be about Fibonacci clusters, and the final video will be about channels. Don't worry if any of these terms are unfamiliar to you. By the end of this mini-series, you will know these tools by heart, and with practice, you will be able to confidently identify tops and bottoms. So, without further ado, let's start with impulse waves. Impulse waves are the easiest pattern in the book. It's a straightforward pattern and can easily be identified. There are 3 simple rules that govern impulses. The first rule is that wave 2 cannot retrace more than 100% of wave 1. This means that wave 2 cannot move beyond the origin of wave 1, and if it did, then this pattern is not an impulse and we should continue to search for an impulse elsewhere. The second rule is that wave 3 cannot be the shortest among wave 1 and wave 5. This doesn't mean that wave 3 has to be the longest, it just means that it cannot be the shortest. So if wave 1 was longer than wave 3, then wave 5 has to be shorter than wave 3, so that wave 3 is not the shortest wave. The third and final rule is that wave 4 cannot enter the price territory of wave 1. This means that wave 4 cannot move beyond the end of wave 1, and if it moves below that level, it would negate the idea that this is an impulse, and we should look for a different pattern to justify the price action. And that really is it. If we are able to identify a pattern that meets these 3 rules, we have an impulse wave. The wonderful thing here is that once wave 5 is complete, we always get price action in the opposite direction. Whether this 5th wave marks a major top, then we'd expect a significant sharp decline, and even if it's just a temporary top, then we would get a corrective retreat. Either way, we get a decline from that high. So, how can we tell when the top of wave 5 is in place? Right now, we are able to identify a 5-wave pattern, and we could willingly label wave 5 as complete right here. However, if we do that, we would end up wrong more often than not. One great aspect of Elliott wave patterns is that it's fractal in nature, meaning that this first wave is composed of smaller degree 5 wave, and this third wave is also composed of smaller degree 5 waves, and the same can be applied to this 5th wave, and all we have to do at this stage is to repeat what we just did to identify this larger degree impulse on this smaller degree 5-wave advance. This way, if we are at this level, here at the end of that 3rd wave, we know that we still have higher highs to go, as the advance from the end of wave 4 is still in 3 waves. Once we start to advance in this green wave 5, we would monitor that pattern closely, knowing that a major top is just around the corner. If you are extra observant, you would notice that we could go to a shorter term time frame and check the subdivisions of this green wave 5, since we now know that this fifth wave must subdivide into a 5-wave structure as well. So if this was a daily chart, we would go down to the hourly chart, and if it was an hourly chart, we could go to the 15-minute chart. You can continue to go to farther short-term time frames to precisely pinpoint and anticipate that top, even to the 1-minute charts. This is the most powerful way to locate a top of an impulse wave. Well, that's all good and dandy, but what if the market is at the end of a second wave in here? Whether it's a zigzag or a flat, these are corrective patterns, and impulses don't exist in corrections, right? Well, that's not completely true, because the last and final leg of a correction can either be an impulse or an ending diagonal. In case of zigzags or flat, the last and final leg, labeled wave C here, always subdivide either as an impulse or as an ending diagonal. And in case of a triangle, wave E can subdivide into a zigzag A, B, C, and that C leg of wave E always subdivide into an impulse or an ending diagonal. Now, let's take a practical example to help drive these points home. This is the hourly chart of cocoa, which we cover in our intraday commodity service, and starting from the 9th of March 2022, we were able to identify 4 waves up, and that the final and 5th wave has started. Here's the chart that we published back then, which anticipated an advance to complete that 5-wave structure. So once we registered that higher high above the end of wave 3 here, it was possible to call this wave 5 complete and that a top is in place. However, we need to check the subdivisions within this 5th wave on a shorter term time frame. Therefore, we go to the 15-minute chart and we start labeling the subdivision within wave 5, and we notice that at this stage we have waves 1 and 2 complete, and that a 3rd wave has yet to locate a top. Moving forward in time, we can label that wave 3 as complete, and this means that so far we have 3 wave advance, which suggests that we still have higher highs in store to complete wave 5 once this counter trend retreat has bottomed. Let's move forward in time, and we now can tell that this 4th wave is complete and that we are in the final stages of this 5-wave advance, and the first hand that a top is in place would be prices posting below the low of wave 4 of this green wave 5. So moving forward in time, now we see prices moving below that wave 4, and that suggests that this high represents the end of wave 5, and that we should expect a decline even if that decline represents a corrective retreat. This is the chart that we published on the 10th of March once prices dropped below that smaller degree 4th wave. Here's what transpired next in cocoa. With that being said, that's it for the first part of this video mini-series. Stay tuned for the coming part, ending diagonals.